This is Danny Gould with the Gould team selling Silicon Valley. Welcome everyone to another Silicon Valley market snapshot for the last week of September here in 2019. Did you read the Mercury news this last week? Saw a very interesting headline right on the front page of the Mercury news. This got me excited. Bay Area real estate, still a good buy. Now this was published sometime last week. My goodness, you guys are a little late to the party now, aren't you? Because this is what I've been talking about since forever. And I think it's true. And what I really wanted to talk about today is, the Mercury news. They bring up a good point. Bay Area real estate, still a good buy. But is it a good sell? And that's what I wanted to talk about today. Is this still a good time to sell? It's always a good time to buy. Well, yes and no, right? But for the most part here in Silicon Valley, historically, it's always a good time to buy. Because when you look at a 5, 7, 10-year window, things have always appreciated. And yeah, there might be dips and valleys, but in essence, you can't really make a bad decision when it comes to buying real estate here in the Bay Area. Let's talk about the sell side though, and let's get right into it, everyone. The heat maps for this week. We have our active listings. Now remember last week, we talked about the fact that for the first time in over a year, we are negative year over year for single family home inventory here in Santa Clara County. That trend has continued through to this week. So 2 weeks straight now of negative year over year inventory. Good news if you're a home seller. So +1, 10 points for Gryffindor, if you will, for home sellers. Is it a good time to be a seller here in Silicon Valley? Active listings. Now, keep in mind, every area, every micro community is going to have a different story. And so when you look at these, so this is +15, sorry for the red. Clearly, whoever makes this is colorblind. That's actually not a joke. My manager's colorblind. I love you, Robert. But anyways, let's go back to the heat map. Let's talk about the areas in the red. Okay, let's talk about Alum Rock. Let's talk about Santa Teresa. Let's talk about Cambrian. Let's talk about Coyote Valley and parts of downtown San Jose. This right here we would consider Berryessa area up until Milpitas. And then Sunnyvale, -1. Nice. Some of these areas here, now let's look at, for example, Campbell. Campbell +55% and Willow Glen +43. So some of the central areas here, some of the premier areas in the central part of San Jose experiencing higher than normal inventory levels for this time of year. And you juxtapose that with pending listings, and then you get the full story. So we come to the pending listings, and again, Alum Rock +10%. So if you look, whoop, I know, technology, right? -29. So there's less competition and more buyers. So if you're in Alum Rock, now's a great time to sell. The other place I wanted to look at was down here in Cambrian. Cambrian +22% year over year and -15% year over year inventory. So less competition. Cambrian has less competition and has more demand than it did at this time last year. So very good news if you are a home seller here in Cambrian, or if you're a home seller in Alum Rock. Now, there are some areas where there is less inventory, but also less demand, and there are some areas where there is more inventory, but also more demand. One of those areas would be Campbell. Campbell is up 55% year over year, if you notice. But if we come down here to the pending listings, we're +86%. So that additional inventory is being absorbed, and then some. which should be encouraging news if you're a home seller in Campbell. Well, what does that mean for you? Does that mean that prices are going up? Does that mean that prices are going down? When we see those two numbers overlap with each other, like there's not an inverse relationship, what it generally means is it's going to be very specific to your cause. Case in point, if you have a beautiful home, primo, top of the line, you could still very well, and in that meat and potatoes range of like 800,000 to 1.5-ish million, in Campbell maybe like 1.6, you could very well get multiple offers. You might even expect, if you price it correctly and market it appropriately and very aggressively, especially with an aggressive coming soon campaign, you could expect your home almost to get multiple offers based on what we're seeing now if you had your home on the market already, right? And again, these are a week, but things fluctuate, right? Like last week we were talking about Santa Clara being an amazing pocket. Now the pending listings are up in Santa Clara, but then so is active inventory. Last week inventory was down pretty significantly, if I recall, somewhere in the 50% range. And so again, right, these things fluctuate, and every single week is like an ebb and a flow and a dip and a valley and a peak and a valley. Not a dip and a valley, that's the same thing. But what I'm really trying to stress right now, everyone, is that every area has its own story, and it changes week over week. The reality is, though, is when you look at days on market, almost everywhere in the county is close to, if not at or above, 30 days. That's a whole month. And so these things change over time, but the marination period, the amount of time, the amount of exposure a home needs seems to be equalizing. It seems to have reached a stasis, if you will. Like it seems to have reached this point where it's going to for an average home on the market right now, priced appropriately and marketed well. I mean, we're just talking average here, right? It's going to take about 30 days to sell your home. Now, if it's a single family home, it might take a little bit less. If it's a condo or a townhome, it might take a little bit more, and here is why. Come down to the Santa Clara County stats for this week, and if you notice, we're at 696 active townhomes. Look at how close we are. We're only 100 units off. There was a time where we were almost 2x where we were at this time last year. And so we seem to have, last year's market has caught up to this year's market. And so what we really want to look for is not only how we're doing in 2019, but also how we're comparing to 2016. And if you see, we definitely have more homes on the market than we did at this time last year. We also have less pending sales, right? So definitely there is some good signs, right, when we compare it to last year, but then also to a banner year like 2016, we're still a little bit off, right? And so it's not like all sunshine and rainbows for home sellers right now. There's definitely some give and some take. It's not the same market that it was. Also, condo townhomes, when you look at that, we're at about 1.25, 1.3x the amount of inventory, and we're definitely down in terms of pending listings by almost 100 units. And so, again, right, and I've talked about this in previous videos, 2016 is a beautiful year. It is a banner year, a great benchmark to compare our numbers to, because what happened in 2017, 2018, there was so much weirdness, there was so much volatility that it's really hard to gauge the health of a market, whereas in 2016, the market was fairly stable and strong for the entire year. And I personally feel like those are the best numbers to look at when we're comparing numbers and such. But let's go down now to these numbers. I just want to run through them real quick. The year over year changes, right? And so again, Negative 1% year over year for inventory. This is the second week in a row that we've seen that. This is good news for home sellers. Pending sales are up. There's more demand. That's fantastic. Same thing with pendings for condos and townhomes. But we're also we're also up in terms of inventory. But this is very, this is very good, guys. This is very, very good when we compare it to where we were at the beginning of the year. And that obviously has more to do with the suppressed inventory numbers of 2018. But keep in mind, if this were truly a buyer's market, and if we were truly going into this like era of chaos and bad home sellers scenarios and declining markets and market crashing and everything like that, if we were really going into something like that, we would be seeing these numbers become more and more exaggerated in the wrong way. As in, we'd be seeing inventory continue to creep up, continue to creep up, continue to creep up. And for a while we did. But things have stabilized. And with the pending sales, we continue to see them go down and go down and go down and go down, but we're up. So what about this makes you think that we're in a buyer's market? I certainly don't think so. And honestly, most educated people, most people that know what they're talking about would also agree. Now, let's go into what I wanted to end this with is dissecting some of the rhetoric here in the Mercury News article and seeing how that relates to what we just talked about here on the heat maps. Because remember, the media tends to be 60 to 90 days behind the actual data, right? And so what they're looking at right now is probably like July numbers. If they're lucky, August numbers. And that's when I started to talk about this, perhaps this shift occurring in the fall and the spring months, where we might see a resurgence for homes, in home prices, and a resurgence in the environment or that feeling of a seller's market. Not necessarily the chaotic nature of what we saw back at the beginning of 2017, but something a little bit less exaggerated, but just as frothy for home sellers here. And so it's interesting because this article in the Mercury News was really positioned towards real estate investors, and they talk about Bay Area remaining a strong market for real estate investors, and that the Bay Area scored very well for on the investment side of things. They listed it in the top 20 metros. San Francisco ranked 12th. San Jose ranked 13th. And they go on to explain why that is. And one of those. Well, first of all, one of the experts that they interviewed, this Kramer guy, says that real estate remains a desirable option if the U.S. economy slows or stalls next year. I want you guys to think about that, because for a while now, people have been talking about this real estate housing crisis 2.0. We're going to go through that again. And if you've watched these videos for any period of time, you'll know that I've been vehemently against that notion, because if you look at where the market's headed, there might be a recession, and more than anything, it's probably going to be caused by some sort of trade war or perhaps a stock market correction / crash. But nowhere in those top 5 reasons amongst U.S. economists is there is housing crisis listed as one of those reasons. And so there's a big difference again between recession and housing crisis. And so, of course, in a market where there's so much uncertainty and a recession is very likely in the near future, to say that housing is a good option for investors is very smart, because right now the stock market is volatile. But I'll tell you what isn't: real estate prices. I mean, it's not rocket science. I want to share this. And I've shared this infographic with you before, but let's look at this. Home price change during the last 5 recessions. Yes, in 2008 we had this monumental drop in real estate pricing. Also keep in mind, that the housing crisis caused the last recession, and this was caused by faulty lending practices. When we go back to 2001, do you want to know how much the stock market crashed, or what percentage the stock market corrected in 2001? 25%. The stock market was down 25%. Housing prices went up 6.6% that year. Think about that. 1991, down 1.9%. That's nominal, okay? That's $20,000 on $1 million home here in Silicon Valley. 1981, 3.5%. 1980, 6.1%. But what I really want to get back to is, what if we have another tech bubble, right? What if we have this another stock market crash? 25%. Housing prices up 6.6%. And you want to tell me real estate isn't a good investment? So when I see this in the Mercury News, and I see this this Kramer guy talk about housing prices or housing real estate being a desirable option for U.S. investors, it's like, duh, but also thank you, because sometimes it takes more than just a few good players in the ecosystem to really convince people that what you're hearing from some experts or from your water cooler isn't necessarily the truth, right? Just really sit down and think about it, analyze the facts. Real estate's a great buy. Now, they also talked about Google's ambitious expansion plans in San Jose make the city an attractive spot. Yes, this is something that we've talked about before. Obviously, history tends to repeat itself. Mountain View, not very desirable. All of a sudden, Google moves in, and now you can't find a home there for like less than 1.5 million. It's kind of the same concept, but in San Jose, where the housing prices are well over $1 million already. Think about what Google's going to do to housing prices here in San Jose in the next 10, 20, 30 years. Just think about it. And Mr. Dan Ramus, I don't know you personally. He's an agent at Keller Williams. He said, many small investors find better returns in outlying suburbs. This is true. He's talking about cash on cash return, as in what is the property going to flow. Obviously, a home in Tracy is going to flow way better than $1 million property here in San Jose. That's not front page news. He did say the market has cooled from last year. I agree with that statement. Interest rates have dropped. I agree with that statement. It's becoming a buyer's market. I do not agree. I respectfully disagree with you, Mr. Dan, about this becoming a buyer's market. This is the time for investors. I agree. So I disagree with one statement there, which is it is becoming a buyer's market. Is it trending more in buyer's favor right now? Up until maybe 6 weeks ago, I would say that's the case. Now, I would say that is definitely not the case. Interest rates are low. Yes, it is a good time to buy. And that was the point of this article. And I think that's why they included that little statement from Dan. And maybe they took that out of context. But I would definitely say that, that for the most part, yes, it's a great time to buy. But is it a good time to sell? And if you look at the heat maps, if you look at the data that I provided, ultimately you need to make the decision that's best for you. But I would say for the most part here in Silicon Valley, things are trending up for home sellers. And so I would say that right now is a fairly good time to sell. And again, right, we need to look at, and we won't really know until we dissect your specific scenario. But for many areas here in Santa Clara County, if you look at those heat maps, there is less inventory in your area than there was at this time last year. And by that same token, in many of those same areas, there's also more demand. So less competition, more demand, you do the math. This is Danny Gould with the Gould team, selling Silicon Valley, and I will catch you all in the next video.